Right, it's been quite interesting. I mean, we've got Portugal credit default swap levels very close to where Greece was when it was forced to take out a bailout. Do you think that that is in store for Portugal?
I think so, most definitely. I think it's only a matter of time. The Portuguese, as always, the politicians are saying that they will be able to make this all by themselves. They won't be able to do that. And pretty soon we will hear the politicians from the Portuguese politicians asking for assistance from the IMF and from this rescue fund in Europe. Of course, the rescue fund in Europe is only about 750 billion euros, only about 750 billion euros. And my suspicion is that, of course, they will be.
And it's going to be expanded, definitely.
It will be expanded. Yeah. There's no doubt about that. And in the meantime, there are some other countries like the Chinese and the Japanese starting to buy Portuguese.
Exactly, and that was the biggest story this morning out of Japan as well. They're saying that it is, and basically a vote of confidence for the Eurozone.
Well, not necessarily. I think maybe the Japanese got some other ideas up their sleeves because I think they're slowly diversifying a little bit away from the dollar, firstly. And secondly, if you keep on buying euros, for example, you have to sell something else, and they're probably selling yen. So I think this could be an attempt, and of course they look like the knights in white armor because they are rescuing the Portuguese, but in the process they're also contributing to a slightly weaker yen, and that's exactly what they want.
And you mentioned that they're diversifying perhaps away from US treasuries. What does that mean for bond yields in the US if Japan and China are starting to buy up more European bonds?
In the shorter term, I'm not too concerned about that. What we have seen at the end of last year is that the bond yields globally, actually, I'm talking mostly on the wealthy economies, slowly starting to pick up. Now I'm talking about the peripheral countries in Europe, but the European or the American bond yields slowly started picking up. I think over the next couple of months, we're probably going to see a fairly flat line on bond yields there. But I'm afraid by the end of this year, probably, we are going to see an increase. That's my expectations in bond yields in the US. And the main reason behind that is simply that inflationary pressures must start coming through sometime or the other in the United States. We don't see that yet. We see that in some European countries. But eventually, if you keep on printing US dollars, eventually you must see inflation. And that, of course, will start pushing bond yields up in the US.
So I find the European scenario very interesting. And when you look at how some of the big banks that are holders of this European debt, how they've been performing. Yesterday we saw the likes of BNP Paribas, Societe Generale, Intesa Sanpaolo down between 2.5 and 5.7%. And we're worried about moving bank debt to sovereign debt, and it seems that we're just passing the buck at this point in time because now sovereign debt has now become the bank's problems once again.
Well, I think it's easier if it's a bank's problems because it's easier for the Germans, for example, to bail out a German bank than it is for the Germans to bail out the Portuguese or the Greeks for that matter. And all those banks are so interwoven in their holding of debt instruments that if one bank gets into trouble, of course, all the other banks or many other banks will get into trouble as well. I don't think it's really make much of a difference whether we talk about sovereign debt or whether we talk about banks getting into trouble. And in the US, the United States, there it was primarily the banks that got into trouble. And in European economies, like for example, Ireland's a very good example, there it was primarily the banks that got into trouble, and that spilled over in a fiscal problem. So I think it's pretty much interlinked, and it doesn't really matter, apart from the political approach to the whole thing, but I think that it really doesn't matter whether we talk about sovereign debt or whether we talk about banks getting into trouble.
Taking a look at the local currency against the euro cross, we haven't actually been we haven't depreciated that much over the past week or so. We've held our own. Against the US dollar, we have seen a little bit of weakness. What does all of this spell for the local currency?
You just spoke to Christopher about what's going to be expected on the oil price. And I think one factor that you didn't cover was what's going to happen to the US dollar itself. My suspicion is that the US dollar, and I know many analysts are saying that the dollar euro will probably be in favor of the dollar. I think in the short term, most definitely because of the debt problems in Europe. But eventually over time, if you keep on printing dollars, eventually something have to give. And I think the dollar exchange rate will have to give eventually. My suspicion is we may see a dollar euro at around about 140 at the end of this year. That is our base case scenario at the end of this year. Now that brings us back to the local currency. What's going to happen to the rand? I think in a shorter term, and there are going to be a number of crises in Europe. Whenever there's a crisis in Europe, the euro is going to come under pressure, the rand will come under pressure as well because of risk aversion. But as soon as the crisis is behind us, and I think...
So you're more bearish about the dollar than what you are about the euro?
I am, most definitely. But I think both currencies will come under pressure. Both currencies, for different reasons, are essentially sick. Now the question is what's going to happen to the rand. I think the rand will remain fairly strong, and I won't be surprised if we see the rand at about 650 or so by the end of this year. In the interim, we could see the rand going to 7 odd because of problems in Europe, but eventually it will start coming back. And I think the Europeans will be in a position where they can contain much of the problems or the debt problems in Europe. So in the short term, we're probably going to see a lot of volatility, but eventually we would see the rand
it's
coming
interesting,
back
and
again.
you mentioned commodity prices, alluding to the oil price also being affected by the dollar's movement. And it seems that correlation has started to break with the likes of commodity prices. It's been quite interesting developments, although they are very closely linked, and that is definitely the longer term trend. One of the reasons that commodity prices have also been doing relatively well is the investment factor and of course the speculation factor as well. How will that then play out?
Well, depending what you talk about, what do you mean by commodities? If you talk about the soft
Precious
commodities
or
but gold is one of those commodities that we've been having a look at. I think that we're probably going to see and I'm not a gold bull. I don't really like investment in gold. And I think the reason that people are investing in gold is simply because they're getting worried about what's going on in the United States. There's this worry about inflation, and it's not there yet, but it will come to the fore sometime or the other. And my suspicion is that the gold price will go up, and my gold price will probably go up more than other commodity prices because of the status of gold as a currency, essentially. So I do expect the oil price, for instance, to in excess of $100 by the end of this year, $110 around there. But the gold price, I won't be surprised if we see the gold price pretty close to $2,000. Nobody knows really. And part of the reason for that has to do with what's going with the US dollar itself. Of course, the other commodities, like for example gold and the other soft commodities, is because of what's going on in China, and you and Chris have just spoke about that. So there certainly is a lot of demand coming from those economies. Certainly not, the increase will certainly not be the same that we saw during the 2010s, but it's certainly not going to be a significant fall in demand from those economies.
With the likes of Chile, most countries in Latin America trying to depreciate their currency, very strong words from the Brazilian authorities, and you were alluding to the fact that Japan perhaps is selling yen to buy up European debt, and then the Swiss National Bank also rumoured to intervene once again because their currency is appreciating so extensively. Should we be careful what we wish for? In other words, a weakened currency down the line?
Most definitely. With international food prices going up already, just imagine what's going to happen to a local inflation rate if the rand goes to 7.50 or 8, for example. That will put a tremendous lot of pressure on the inflation rate in South Africa, and of course that will force the Reserve Bank to start tightening monetary policy. Fortunately for us, we have a currency that is fairly strong. That's probably going to remain fairly strong as well. On a comment about the Minister of Finance in Brazil, he said that we have to be careful because there could be a trade war around the corner. We are already in a full-scale trade war, and that's what's happening. The Americans actually started the whole thing because they are trying to get inflation in their economy, and they are trying to weaken their currency by simply printing more. So it's there already. It's nothing new.
Brings up the question of a free market. Thank you so much, Dawie. Much